Hello. Today we are going to discuss another very important topic, final account with the adjustments. We know that all organizations are preparing final account or financial statement of a business. The financial statement of a business includes trading account, profit and loss account, and a balance sheet. An organization is preparing financial statement to know the financial position of the business and to know the status of their investment and the progress made by the organization. Today, our discussion is final account with the adjustments. In the previous video, we already discussed about how to prepare a final account and how and what are the items in the trading account, profit and loss account, and the balance sheet of an organization. Today, we have a clear picture about adjustments. Before understanding the adjustments, we have to understand some more important factors. Point number one, accounting process is starting from identification of transactions, journalizing, posting, ledger preparation, and the trial balance preparation. So the accounting process, we can say journalizing, ledger preparation, posting, balancing, and trial balance. These are the accounting procedure or the process of an organization. Firstly, we will identify the transaction and record each transaction in the books of account, that is known as journal. That means which transaction is a debit and which transaction is credit. You identify that one based on the golden rules of accounting. Then you have to prepare separate ledger for each account. Then from the journal, you have to do the posting. After posting is over, you want to know which side is more, debit side or credit side is more. For that, we are doing the balancing. Then you have to prepare the trial balance. Why an organization is preparing trial balance? Because to know the assets, liabilities, income and expenses are properly recorded in the books of account, or we can say in order to test the arithmetical accuracy of the transactions, we are preparing the trial balance. Normally, the trial balance is prepared with the help of ledger account balances. When the trial balance is a tally, we can assume that there is no mistake in posting and balancing. But here, today our discussion point is adjustments. What are the items included in the trial balance? What are the items included in the trial balance normally? Expenses paid, income received, balance of assets, balance of liabilities. These are the four main items we can see in the trial balance. But when you are preparing the financial statement of a business, some items are not included in the trial balance. In simply, we can say the financial statement is prepared from the trial balance. The financial statement is prepared from the trial balance. Trial balance include expenses paid, income received, balance of asset, and balance of liabilities. These are the four items included in the trial balance. Some items are not included in the trial balance, or we cannot see in the trial balance. What are that items? That items are known as outstanding expenses, outstanding incomes, prepaid expenses, anticipated losses. These four category of items we cannot see in the trial balance. So, whenever you are preparing the financial statement of a business, according to GAAP, generally accepted accounting principle says that we have to follow matching concept. Matching concept says that current year income should be matched with the current year expenses. More detailed, we can say the expenses related to particular year should be compared with the incomes of that particular year. Otherwise, you are not following generally accepted accounting principle. So all the organizations must follow GAAP. So one of the most important concept says in the GAAP is matching concept. So in order to ensure the matching concept of the organization as per the GAAP, we have to include these items: outstanding expenses, outstanding incomes, prepaid expenses, anticipated losses while preparing the financial statement of a business. More clearly, we can say that this year income we cannot show in the next year. This year expense we cannot show in the next year. So matching should be there. Current year income and current year expenses should be matched here. That means whenever you are preparing the financial statement of a business, you have to include or you have to consider these items also. These items means outstanding income and expenses, prepaid items, anticipated items. So these items should be included in the financial statement of a business to get the correct profitability of an organization. Actually, all these expenses are happen in that particular year. That means in this year. So you have to include these items in the financial statements. Otherwise, your income statement and your financial statement is not showing the correct profitability of an organization. These items are known as adjustments. The adjustments are happen after the preparation of the trial balance. So these items are not included in the trial balance. So each adjustments we have to pass separate journal entry and separate treatment will be in the financial statement. So we have to pass adjusting entries for each transactions. That means each adjustment we have to pass separate journal entry. That means the adjusting entry should be passed, and at the same time the treatment will be reflected in the trading or the profit and loss account and balance sheet. We know that we are following the double entry principle of accounting. So each and every transaction there is two aspects will be there. One will be the debit aspect and another will be the credit aspect. So each journal entry, that means each adjustments we have to pass separate journal entry, separate adjusting entries. It have a treatment in different places. That means in the trading or the profit and loss account and balance sheet. This is the brief introduction about financial statement with the adjustment. One of the most important points to be noted while preparing the financial statement of an organization, you have to consider the adjustments related to that particular year. Otherwise, you are reported a wrong income. Normally, the trial balance include only the expenses paid, income received, balance of assets and liabilities. Trial balance does not include outstanding, prepaid, anticipated items are not included. Hence, we have to include all these items in order to prepare the financial statement of an organization, and through we will get a correct result of the organization. Then we can discuss one by one adjustments, how it will be reflected in the financial statements. The first adjustment in the financial statement or the final account is outstanding expenses. What is the exact meaning of outstanding expense? It means those expenses which are due during the current year but not paid. Example, salary outstanding, wages outstanding, rent outstanding, any expenses which are not paid is known as an outstanding expenses. Simply we can say outstanding expenses are those expenses which are due during the particular year but not paid. Due during the particular year, that means it is related to that year. So we should include it in that particular year, but the payment will be later, no problem. As per the GAAP matching concept says that current year expenses should be recorded in the current year only. Current year income should be recorded in the current year only. That means current year income should be matched with the current year expenses. First adjustment, outstanding expenses. Expenses due but not paid. Here, expenses due but not paid is known as outstanding expenses. What are the example of outstanding expense? Salary, wages, rent, any expense outstanding. What is the entry for outstanding expense? Expense means always a debit only. So which expense is coming? Salary, salary account, debtor to outstanding salary. If it is rent, rent account debtor to outstanding rent. Why expense is debit and outstanding expense is credit? The reason is expense is increasing, debit. All expenses are always debit only. Why outstanding expense is credited? Because it is a liability not paid. All liability is always credit because liability is increasing. One point is expense is increasing, so it is debited. Second point, expense liability is increasing, that is why liability is credited. So the generally we can say expense account debted to outstanding expenses. Now you understand why debit expense and credit outstanding salary is coming. Expense is increasing because salary not paid. There is an increase of expenses there. Therefore, it is debited. Still, this amount is not paid. That means it become your liability. So you are showing in the liability credit. Liability is increasing. What will be the treatment of the outstanding expense? Whenever this outstanding adjustment or the outstanding item is coming in the adjustment, how you will treat this item? First treatment will be, it is added to the concerned expenses in the trading or profit and loss account. For example, in the trial balance, salary 10,000 already given. Adjustment is saying 1,000 salary is not paid. That means outstanding. What you will do? While preparing, in the profit and loss account, you will write to salary. If it is in the profit and loss account, it will come like this. Look here. Salary 10,000 plus outstanding salary 1,000. So total will come 11,000. This is the treatment in the income statement or the profit and loss account. The treatment is, first it is added to the concerned expenses in the trading or profit and loss account. If it is wages, it will come in the trading account. If it is a salary or rent or any other expenses, it will come in the P&L account. The first treatment is, it is added to the current year expenses in trading or profit and loss account, the same model. Second one, this expense is still not paid. Salary or rent or any expense still not paid. That means it is a liability. So it will be shown in the liability side of the balance sheet. Two treatments are there. Number one, it is added to the concerned expenses in the trading or P&L account. Number two, it is shown as a liability. Why it is shown as a liability? Still not paid. Maybe later only they will pay. That's why it is shown as a liability side in the balance sheet. Another important points to be noted. Sometimes the outstanding expense may be given in the trial balance, not in the adjustments. There is a confusion will come. It is related to the previous years, not paid. So it should be shown only in the liability side of the balance sheet. Only one treatment is there. But if it is shown in the adjustment, you can see two treatments are there. One, it is added to the concerned expenses in the trading or P&L account and shown as a liability in the balance sheet. If the outstanding expense is given in the trial balance, it is shown only in the liability side of the balance sheet because it is not related to this year. It is previous year item already appeared in the trial balance. Trial balance items normally reflected in one place only. It may be in the trading or P&L or balance sheet. But adjustment items will be reflected in the trading or P&L or balance sheet because double entry system or dual system of accounting, we are following that one. Now you understand how to prepare this financial statement with the outstanding expenses. Number one, it is in the trial balance. Number two, it is in the adjustments. Adjustments, two treatments. Out in the trial balance, only one treatment is there. Adjustment number two. Prepaid expenses. Prepaid expense is otherwise known as expense paid in advance. Expense paid in advance. Or otherwise we can call as unexpired. Unexpired. Insurance unexpired. Rent unexpired. So this prepaid expense is otherwise known as unexpired or paid in advance. the benefit of some expenses, if for example rent paid, rent may be paid not only for the current year, may for the next year also. In such a situation, we are saying rent paid in advance. The rent will be for the next year up to 31st of March. So 3 years will be paid in advance. Our accounting year is closing on 31st December. Based on that, we can say 3 months will be paid in advance. Our accounting point of view, GAAP says that current year income and current year expense, that points to be noted always whenever you are preparing the financial statement. So any paid in advance or any prepaid expense is there, you have to be adjusted from the current year expense. Insurance premium paid for up to the next year. So how much you paid for the next year, you have to minus from that one. And the amount paid in advance is shown as an asset in the balance sheet. Firstly, the benefit of an expense which are not being enjoyed before the end of the year. The benefit of a particular expense is not enjoyed in that particular year. The benefit may be related to the next year also. The benefit will be available in subsequent years also. That type of expenses are known as paid in advance or unexpired. Whenever this item is in the trial balance, it will be shown only as an asset in the balance sheet. If it is shown in the trial balance, you can say it is shown what? Only in the asset side of the balance sheet only. If it is given in the adjustment, we know that we have to pass separate adjusting entry for each entry. So the journal entry is prepaid expense account debted to expenses. Prepaid expense, if it is rent, rent prepaid. Debit and credit will be expenses. Why this rent prepaid or the prepaid item is shown as a debit item? Because it is an asset. Paid in advance is an asset. That is why it is shown in the asset side of the journal entry or the debit side of the journal entry. Expense is credited here. Why expense is credited? Because your rent is reducing. Some portion of the rent is related to the next year. Some portion of the rent is related to the next year. So you minus. Instead of minus, you can show the expense will be credited. Expense credit means expense is decreasing. Expense is decreasing. So prepaid expense is an asset. That is why it is debited. Expense is reducing. That is why expense is credited. So two treatments are. First treatment will be it is deducted from the concerned expenses in the trading or P&L account. Number two, it is shown as an asset in the balance sheet. Second point, if it is given in the trial balance, only shown as an asset in the balance sheet because it is the previous paid in advance, not related to this one. It is advance payment, always asset only. While preparing the profit and loss account, just look their example, insurance paid is 1,500. How much is the prepaid portion? 500. You can minus the net amount only you can show in the balance sheet. Prepaid expense means unexpired or paid in advance. The benefit of an expense not enjoyed in that particular year, some portion of that expense will related to the next year. That type of expense are known as prepaid expenses. Example, insurance premium, tax, rent, etc. The adjusting entry for prepaid expense is prepaid expenses account debit and credit will be expenses. Prepaid is an asset, that is why it is debited. Expense is reducing, that is why it is credited. The treatment will be it is deducted from concerned expenses in the trading or P&L account and shown as an asset in the balance sheet. If it is given in the trial balance, prepaid expense is given in the trial balance, it can be shown only as an asset side of the balance sheet. Adjustment number 3. Income earned but not received. Income earned but not received. It is otherwise known as outstanding income or accrued income. Outstanding income or accrued income. It is just opposite of outstanding expense. Some income earned during the current year but not received. Some income earned during the current year but not received. Earned during the current year but not received. As per the matching concept, gap says that current year income should be recorded in the current year only. So we have to record these items also. Example, interest on investment commission. Some commission you earned during the year but still not received. That type of income is known as accrued incomes or outstanding incomes. Income earned during the current year but not received. So the example is interest on investments and commissions are earned during the current year but still not received. The adjusting entry is accrued income account debted to income. The adjusting entry for accrued income is equal to accrued income account debted to income. Why accrued income is debited? Because it is an asset still not received. Maybe tomorrow or next year or any time we have to be received. Therefore, it is an asset. It is your income. That means your income is increasing. Therefore, income is credited. Always income is credited, asset is debited. That is the policy we are applying here. The treatment will be added to the concerned income in the profit and loss account. Which income you earned? Example, commission received 2,000. 1,000 accrued commission is there. Therefore, you have to add 2,000 plus 1,000, 3,000 in the profit and loss account. 1,000 is still not received means it is your asset, shown as an asset in the balance sheet. Here, accrued income account debted to income is the journal entry. The treatment will be added to the concerned income in the P&L account and is shown as an asset in the balance sheet. While preparing the profit and loss account, you can show like this. Interest on investment is this much. Add accrued income, outer column, the net amount. Sometimes this accrued income or the outstanding income you can see in the trial balance. At that time, you can show only as an asset side in the balance sheet because it is the previous one not related. It's a trial balance item. Trial balance items will be reflected only in the trading or P&L or balance sheet only because already one treatment is over. That is why it will be taken only one place only. Income earned but not received. Earned during the current year but not actually received. Example, interest on investment, commission, etc. Adjusting entries, accrued income account debted to income. The treatment is added to the concerned income in the P&L. Second treatment will be shown as an asset in the balance sheet. Then if it is appeared in the trial balance, you can show only as an asset in the balance sheet. Adjustment number 3, income received in advance. It is otherwise known as unexpired income. Some income received during the year may be a portion related to the next year. For example, rent 10,000 you received already, but 2,000 is not related to this year, next year. So you have to consider the next year portion transferred to the next year. So the income for the current year only 8,000. 10,000 you earned, but some portion is related to the next year. 2,000 is related to the next year. So actual income for the current year is only 8,000. 2,000 related to the next year. Such a type of incomes are known as income received in advance. Example, commission received in advance. So which commission is received in advance? You have to minus. What is the entry, adjusting entry for that one? Income account debted to income received in advance. Income. Which income is receiving? Rent. Rent is an income. Rent received is debited here because your income is reducing. Income reducing, debited. Income increasing, credited. So income received in advance is a liability. Therefore, you are showing as a liability side in the or the credit side in the journal entry. The journal entry income account debted to income received in advance. Why income is debited? Because income is reducing. Because you have a liability here, therefore it is credited. The journal entry income account debted to income received in advance. What is the treatment? It is deducted from concerned income. I told you 10,000 is received, 2,000 is related to the next year. So you can minus 8,000. Shown as a liability in the balance sheet. How much is the next year income? 2,000. Shown as a liability in the balance sheet. First portion deducted from the income. Second is shown as a liability in the balance sheet. The example you can see commission. Here and minus received in advance, net amount we can show in the profit and loss account. Sometimes if it is given in the trial balance, that it will be shown only as a liability side of the balance sheet only. Trial balance only in the liability side of the balance sheet only. Income received in advance is otherwise known as unexpaid income. Income received during the current year related to the future period. Only some portion of the income related to the next year or the next period. Example, commission received in advance and rent received in advance. What is the treatment? Deducted from concerned income and shown as a liability in the balance sheet. If it is given in the trial balance, you can see or you can show only in the liability side of the balance sheet. Thank you.